Alright everybody, welcome back to Only Divergences, another week and another called trade. Let me play you a clip from my video that I published last Friday. Now, what do we want to look for? Well, we would want on Monday a move lower. If we repeat perfectly, you want to buy on Monday at the close and sell on Wednesday at the open. So in that video, I outlined the trade, and remember in that video I said if you watched and it plays out, you have to subscribe, so you better hit that button. The trade I outlined was an analog between the current pullback that we're in here on the QQQ and the one that happened in March, pointing out similarities. Go watch the full thing. I'll put a link on the top right and in the description so you can click on that. Now, I did say in yesterday's video that I didn't buy at the close yesterday, but that doesn't mean that I didn't buy at the open today, which was just as good as there was only a small gap overnight. Subscribers, if you were in that trade, congratulations. You know me, profits were already taken, but I note that even with options, it was only just over 100% returns at 11:15 when I took that screenshot that you see in the thumbnail. That's the Wednesday expiry of the 355 QQQ call. So in this video, I'm just going to outline why I didn't go long at the close, so comparing the analog, and why it was good to go long at the open. Also why profits were taken before the originally scheduled hold overnight to Wednesday morning. All right. So I'm not going to start off with the weekly as I usually do to describe the whole trade. You can watch the video from Friday. You can also watch yesterday's to see it there. Overall, we were looking for another move down on Monday, and that's what we got. But in the March analog, we had a nice, clean, bullish divergence, right? So this clean, sharp, higher low on the MACD, it's very powerful. That's the bullish divergence. So in doing so, the force of this setup meant that the oversold condition, see here, would resolve itself to the upside vigorously. It was a very strong setup. That's why my channel is called Only Divergences. I'm only concerned with these strong momentum divergent patterns and their natures, okay, because that's how you get the biggest returns. But yesterday, right off the bat, we did not have bullish divergence, right? We have a low. We have a similar low, but this was much more cleaner. Right, you have a clean, higher momentum low. Here we don't exactly have that. So this told me that the probability for a huge gap higher, as was the case in March, was not as high today as it was in March. And given our position in this market, the risk still exists for a move lower. So no need to hold overnight and take on that risk, right? So in the morning when we saw price was going to open up here, saw that pre-market was going to open up here, we had to ask really only one question. Is this market going to push lower or higher given the setup? And the setup is an extremely oversold condition on the hourly MACD. Or just to ask it more simply, with price opening here and MACD already oversold and curling up, you can see this is what it was. Is it more likely that we get a small move higher here, like this, or that we reverse the gap and push this oversold reading even stronger? The answer is obviously higher, and that is why you could have easily gone long at the open with a relatively high conviction 1% move higher, which on options returned about 100% as you saw in the thumbnail. So then why take profits early, or earlier than originally planned? Well, for the same reason I didn't hold overnight. Okay, without the clean bullish divergence, the analog was different, less forceful, and therefore we have to manage expectations and risk of an exact repeat, which we see was somewhat deteriorating. Okay, when you're dealing with near-term options, you always have to be aware of the risks involved and be ready to take profits early unless your exact plan says to hold. Now, this does not mean that we do not gap higher tomorrow. Okay, that could happen. In fact, it very well could happen. It just means from an RRR, risk-reward ratio calculation, that is all I'm looking for right now without wanting to adopt more risk. I'm glad I've been able to clearly explain the exact trades and the rationale and reasoning behind them based entirely on technical analysis. Remember, I made this channel because I want to convert you to a technical analyst, right? So I'm not going to do a thorough analysis of where we are now in the QQQ because as a rule, whenever I make a good trade, I take at least a day off, and I'm sure many of you know that's good practice. After a big win, you need to cool down. But all I will say is that QQQ is still looking structurally oversold, meaning that if we do get a dip here, I would probably think we would want to start thinking about potential long entry again, right? But based on solid setups. But again, that's if we get a dip here. We can see that it does look like we're repeating, and I wouldn't be surprised if we have a gap here. But notice that the gap dropped after, so be careful. So thanks again, guys. Really happy to make it 3 for 3 now on my weekly trades, and I look forward to the next one. Make sure you subscribe and like this video so you don't miss out, and I'll see you tomorrow.